Hi everyone, Neža here, and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. Let's dive in. Today we will talk about one of the biggest car manufacturers in the world. Just a quick reminder before we start, this presentation is for educational purposes only and it should not be taken as investment advice or recommendation to buy or sell any financial instruments. Volkswagen was founded nearly 100 years ago in Germany. The name actually means people's car, which is reflecting their original goal of making affordable vehicles for the masses. Today the company owns 10 different brands including Bentley, Bugatti, Lamborghini, and they also own 75% of Porsche AG, that is a luxury sports car maker that was listed on a stock market in 2022. Volkswagen stock has faced a turbulent journey over the past few years that was marked by both promises and challenges. The stock is down nearly 20% year to date, and the biggest drop actually happened in the end of May due to concerns over their uncertain future. There was a series of deals, including partnership with Rivian, and all of that raised doubts about companies' ability to resolve their own internal struggles, like their struggling software division called Herič, and there were some news about potential factory closures and lower profit forecast for 2024, which all added up to investors' worries. But if we want to understand better the stock performance, we have to know a bit more about their business. First, we have to talk about Volkswagen business segments. The biggest segment for them is passenger cars and light commercial vehicles, which makes up 76% of their total operating revenue. This includes brands like Volkswagen and Audi. It is followed by financial services division, which is responsible for financing, leasing, and insurance. And this one contributes about 16% to their total operating revenue. Commercial vehicle segment includes brands like Scania, and this one is driven by global demand for trucks and buses. And lastly, they have power engineering segment, which focuses more on large engines and specialized equipment, and it is the smallest part of their operating revenue. If we take a look at which markets are the most important for the company, we can clearly see that Europe is the most important market for them because it represents almost 60% of their operating revenue, and they actually have the biggest market share among car manufacturers in Europe. It is followed by North America with 21% and then by Asia Pacific region with 15%. And here actually China is the biggest single market for them. An important number for all car manufacturers is car deliveries number, and we can check this number for Volkswagen for the past few years. Based on the worldwide vehicle deliveries, we can see a slightly better performance in 2023 compared to the past few years, which were also marked with pandemic. But in half year of 2024, they saw a slight decline again, and they have also cut guidance for full year of 2024. Now they expect to deliver 9 million vehicles in full year of 2024, which is lower than last year performance and also lower than previously expected growth of 3%. It is worth mentioning that a big part of their business development is electrification. In the first half of the year, Volkswagen Group sold approximately 300,000 all-electric vehicles, and that is about 1% less than a year ago, and all-electric vehicles represent about 8% of their total vehicles sold. They are facing some issues with electrification, and that is especially high production cost and delays with their software division called Herič. That is why Volkswagen invested 5 billion euros into their partnership with Rivian. That was to strengthen their software capabilities and to boost their North American presence. Besides that, they're also facing competition from more affordable Chinese electric vehicles, especially from a company called BYD. It's also important for us to check their revenue growth and margins to see how strong is their business. Here we can see a solid revenue and operating margin growth in the past few years. However, in the first half of 2024, their operating margin fell for approximately 1%, and that was due to rising costs, restructuring efforts, and also a slow scale-up of their electric vehicle production. Besides revision in car delivery number that we mentioned earlier, they also cut expectations on revenue and on margins for 2024. Now their revenue is expected to fall to 320 billion euros, and their margin is expected to be at approximately 5.6%, which is much lower than previously expected 6.5 to 7%. Now for the last part, as always, we will take a look at valuation. The company is currently trading at 3 times earnings with a PB ratio that is below 0.5, which is suggesting undervaluation. Besides that, their current dividend yield of 9.7% might be appealing to some income-seeking investors, and the company holds a diverse portfolio and they have the largest market share in Europe. Despite low valuation multiples, Guru-focused tracker flagged Volkswagen as possible value trap, and that is because company is facing deeper operational challenges. They are cutting costs, they are planning to close factories and in both China and Germany, and they are facing a tough competition in electric vehicle space from companies like BYD and Tesla. Besides that, Volkswagen is only producing about 35% of electric vehicle components in-house, which is making them more vulnerable to supply chain issues, and it is also putting more pressure on their margins. The company's future success depends on managing risks in electrification, software development, and restructuring, and all of that while facing a tough competition in the market and high capital expenditures. All in all, Volkswagen is a fascinating company with a long history and a mix of challenges and opportunities. So let me know what you think about them and which company would you like to see next.